Modern Forex markets move fast. If you try to navigate the volatility of 2026 by relying on a single moving average, you will likely find yourself getting chopped up, faked out, and repeatedly stopped out. The solution to that market noise is the Ichimoku Cloud. But if you've ever loaded it onto your screen, it probably looked something like this, a chaotic mess of lines. Ichimoku functions as a complete trading ecosystem. Each component specializes in a specific data point, providing a simultaneous view of trend direction, immediate momentum, and future support or resistance zones. By deconstructing this web step by step, we can build a strict filtering system, one that strips away the erratic price spikes and isolates institutional-grade high-probability trade setups. Let's strip away the noise, leaving just price candles and the Kumo cloud. When price pushes above it, the trend is bullish, acting as support. But when price drops inside the cloud, it's the sideways trap, a state of indecision where you halt trading entirely. You also need to look at the depth of the cloud. A thick Kumo indicates strong historical price action. That thickness creates a highly fortified zone that price struggles to break. Conversely, a thin cloud means weaker support and lower volatility. Because the Kumo is plotted exactly 26 periods into the future, it serves as an early warning system. If you look ahead, you might see a Kumo twist, the exact moment the two boundary lines cross and shift color. This acts as a leading indicator, signaling a potential trend reversal well before it happens. Using the Kumo as your first filter immediately protects your capital. It prevents you from entering the market during choppy, directionless conditions. Once we know the environment is safe, we add two lines to measure immediate momentum. The fast-moving Tenkan-sen acts like the market's immediate pulse. Beneath it is the slower, more stable Kijun-sen, functioning as our medium-term baseline. Your primary entry trigger is the TK cross. This occurs when the fast Tenkan-sen crosses the slower Kijun-sen baseline, signaling a sharp, sudden momentum shift. But a cross alone isn't enough. If it happens inside the cloud, it's a weak signal you must ignore. For a high-probability entry, a bullish TK cross must happen entirely above a green, bullish Kumo. By demanding that your momentum trigger aligns perfectly with your broader trend environment, you filter out the false entries that slowly drain trading accounts. There is one final technical layer, the Chiku span. It looks unusual because it is simply the current closing price plotted exactly 26 periods in the past. Think of it as a radar for historical obstacles. If the Chiku span tangles in old price candles, your path is blocked. Abort the setup. To validate a buy signal, the Chiku span needs open airspace. You want to see it floating cleanly above the price action from 26 periods ago. That clear space proves that the path to profit is unobstructed by historical price ceilings. The Chiku span is your final safety valve before pulling the trigger. So you have a perfect Ichimoku setup. The environment is bullish, the momentum crossed, and the path is clear. But that setup will still fail if you are trading directly against the macro trend of the broader market. Look at this split-screen comparison. On the left, a 1-hour chart shows a pristine, glowing green buy signal. But on the right, the daily chart reveals a massive, dominating red Kumo pushing price down. Buying here is a trap. Professional traders use a strict workflow. You start on a higher time frame, like the daily or 4-hour chart, to establish your strategic bias. Once you confirm the macro trend is bullish, you drop down to a lower time frame to find a tactical entry that matches that exact bias. You only execute when both time frames agree. True confluence means aligning the internal Ichimoku components with the external context of the entire market. We started with a screen that looked like pure chaos. Now we have a logical, step-by-step filtering system. But even the highest probability setups will sometimes fail. The market is unpredictable, making strict risk management non-negotiable. Ichimoku provides dynamic support for logical stop losses. For standard trades, your stop loss snaps precisely into place, below the Kijun-sen baseline. For a conservative defense, it anchors firmly below the Kumo cloud, relying on the indicator's strongest structural support. The Ichimoku Cloud provides a probabilistic roadmap that enforces emotional discipline and rigorous capital protection. It's time to stop chasing random indicator signals and hoping for the best. You need to start practicing these filtered, high-probability confluence setups in live market conditions. The best place to build that discipline is the FXNX platform. Our interface gives you the institutional-grade technology you need to track dynamic cloud levels across multiple timeframes seamlessly. Open a free demo account on NX1 today, experience zero pip spreads, ultra-fast execution, and start mastering the Ichimoku Cloud.